It's interesting that you mentioned the correlation between July 4th holiday and precious metals. And I guess in the back of my mind, I've always acknowledged that and embraced it, so to speak. In a world of decreasing privacy and increased litigation, in a world where your digital footprint is becoming more and more pronounced, in a world where anonymity is fleeing, I guess I've always really respected and enjoyed the benefit of owning an asset that is not simultaneously the liability of a third party. Owning an asset that I don't even know how much I have sometimes and requires me on an annual basis to count what I have and what I've added and what I've subtracted. And it's very analog in a very digital world. And you can see even our currency is becoming more digital. Our banking is digital. We access our home and our cars, and everything now is in our hands with the digital application and a digital footprint. And I take some sort of, it gives me kind of an inner peace, so to speak, in a weird way. And I guess I've really never articulated it, but I've always understood it and embraced it. And in a world where counterparty risk and systemic risk is becoming more pronounced, there is something to be said for the independence you get, and pun intended, of course, from having an asset like gold and silver that really are free from that. And I think we're beginning to see that. Well, not beginning, we have seen that. This is something I've talked about with you for a very long time, and I noticed it in 2020 with the rise of the others. We've talked about that a lot on COMEX, where in 2020, this group of traders that was new to the Commitment to Traders report, typically it was just the commercial banks and the specs or the hedge funds that were listed as the largest traders and their positioning on the Commitment to Traders report. That report that's published weekly by the CME group shows the positioning of the largest traders, two groups until there was a third, the others, who took more silver in 2020 than we typically see in the decade. And that trend continued in 2021, and it started to catch, I think, too much attention. And not just by guys like me and you, but too much attention from everyone, and maybe the traders. Another story that fits this agenda, this growing narrative of countries coalescing together using commodities and mutual beneficial cooperation into what appears to be a new multipolar world, where I think gold has a very relevant role. So I just wanted to say that for those people out there who think that countries like the BRICS lack the trust of the rest of the world, I would agree with that statement. I don't think the United States has much of the world's trust any longer either. And that is why Zoltan Pozsar has said, and I agree with him, we have entered Bretton Woods 3, a system dominated by commodities and transparency and using distributed ledger technology to show the veracity of what is backing, that being the only other tier 1 reserve asset in the world, perhaps. Backing a new system is the only way to make it work. And that is the motivation of everything that I talk about as it pertains to this growing chorus of countries. And I think to focus on the recency bias of the dollar being the only option in the world and to never think that a challenger will arise is a mistake. And unfortunately, I feel we are on the heels or the foothills of a big change. And if Jim is right, and they come out with a gold-backed currency and a bond market to support it, as he surmises, things are going to get very interesting as we head into the fourth quarter.
Small ebook, big impact, The Wealth Tree. The only 4 ways that will make you financially free forever. Download it here for free.
An exponential curve where things start to change little by little and then they fall off the cliff. And just like Hemingway went broke little by little, then all at once. And I would argue that's exactly what we're seeing happen here. All of these pieces that we talk about, who cares what's happening in Kenya? Who cares what's happening in Zimbabwe? Who cares what's happening in all of these far corners of the world? You should, because little by little, then bang, all at once. On a Sunday morning, we wake up, or a Monday morning, to a new reality. And I think that's where we are heading. And I think suffering from recency bias, whether it be in preparedness for your family's food and water and shelter, physical protection, or financial protection, they all have something in common, and that is you have to first acknowledge the potential for protection, for insurance, for preparedness. And if you don't, you scramble and you lose peace of mind. So I think there's a lot there in common. I appreciate that insight. But as far as precious metals are concerned, look, I'll say it again. It's very interesting. You listen to guys like Andrew Maguire, you see the massive deliveries coming off of the world's exchanges, and you wonder, is there this massive shortfall in wholesale demand? Now, I believe it. I think there probably is. But it's hard for a lot of people to justify that statement when they see premiums falling and availability as good as it is right now. And I understand that. Obviously, the wholesale demand is somewhat of a leading indicator for the retail product availability. And if indeed we are seeing what certainly it seems like a lot of players rushing to take the delivery any way they can, in this case exchange for physical, that it is a foreshadowing of what will ultimately into the third quarter be higher premiums and lesser availability. And if, of course, we see more problems with the banks, and watching your interview with Rick Rule, I completely agreed with his take on the fact that we are nowhere near out of the woods. And he, much like myself, are both find it amusing that and shocking that the people around the United States feel that we're out of the woods, that everything was taken care of, and have forgotten about the banking problems. Of course, when they just did this recent stress test, only to find that Truist Bank and U.S. Bank are two of the worst banks in the United States, certainly brought it back home to me. It's because when I moved to Florida, I opened a bank with Truist. When I left Minnesota, I left a U.S. bank account there. This is real. And no matter how much I try to escape it, even as an analyst, it keeps finding me. And I don't think we are out of the woods even a little bit, with several $100 billion worth of commercial real estate leases to reset in the third quarter at what is basically double the cost. And the small businesses that are attached to those leases realizing that the regional banking industry has roughly 70% of the small business loans and of the commercial loans and leases in the real estate space. So we're not out of the woods even remotely. We have not seen the end of the banking problems. And I think when that reignites, which I expect it to do here in the coming months, we will see a resumption of the craziness that was March and April in this industry. Yeah, I think this is the best buying opportunity for those that want to add to their portfolio that I have seen in over 3 years. Price, premium, availability, and counterintuitive pricing when we see such a massive rush to take physical delivery by the most well-informed traders on the globe and well-funded. It just seems to me like a no-brainer. But here again, it bucks human nature. When people are told to buy low and sell high, they typically buy when there is validation, kind of like the person who has anxiety that he hasn't prepared well enough with food and water. That's what we saw in March and April for the people who had tremendous anxiety. Just, I got to get my money out of the bank, please. We don't hear that right now, but we will before the end of the year. And that's the ironic thing about this whole ecosystem, is a lot of people inherently get it, but they're just closing their eyes and hoping it goes away. And that's not the way to prepare. And this is no different.